So if you're in a situation where you want to do a short sale and Wells Fargo is your servicer, meaning that's who you pay your mortgage to every month, Wells Fargo has kind of a unique process that's different from other banks. So we're going to hit some of the highlights of the Wells Fargo short sale process just so you have a general understanding and overview. First of all, in most cases with Wells Fargo, depending on who your investor is, and what that means is when you talk about an investor on your loan, Wells Fargo may be your servicer, but the investor may be FHA or Fannie or Freddie Mac. What happens basically is Wells Fargo, being the servicer, has to follow the guidelines of the investor when it comes to the short sale process. So what will happen is when you start the process, it's very good to identify who the actual investor is on your loan. And reaching out to a qualified real estate agent, they can help you determine that before you start the process. You will be identified for what your financial hardship is. So basically, you will have to provide certain documentation. You're going to have to provide pay stubs, you're going to have to provide tax returns, you're going to have to provide bank statements, and you're going to have to provide a written explanation of what your actual hardship is to qualify for a short sale. There are some exceptions. If you're 90 days behind on your payments with some investors and you have a credit score of less than 620, they're a little less intrusive on your actual financial picture. But in most cases, to qualify for any short sale, they're going to want to see some type of hardship. So basically what happens is you provide to them your financial documentation and they'll review you for short sale qualification. Then at the same time, you want to get the property listed. While you're getting the property listed, Wells Fargo will send someone out to actually do a valuation of your property, because if they agree to do a short sale, they want to make sure that they're still getting market value for the property. So they'll come out and do an evaluation of your property, and then they will either disclose that, depending on what investor it is, disclose that to you and to your realtor what the value came in at, or they will just kind of give you a range of, hey, if you get an offer in the 250 range, we'll be willing to work with this. So throughout this process, they're going to consistently be asking for documentation. Most Wells Fargo short sales are done through the Equator processing system online. So if you select an agent to help you with a short sale, you want to make sure that they're familiar with the Equator process. So they'll be responding to your agent through the Equator process. And if you don't have an FHA or a VA loan, they're going to review you for what's called a half a short sale, which basically is a program that was done by the United States Treasury that offers an automatic deficiency release, offers relocation money, and is a very great short sale program for anybody that's out there in a situation where they're struggling to make payments. So they're going to review for that, and once they qualify you for that and they get the valuation in, so they've identified that you qualify for a short sale under their investor guidelines, they get the valuation back. Once you get a short sale offer, they're going to review the offer, make sure it meets their net. If it meets their net, then basically they're going to accept the short sale. Now, the short sale's a lot more complicated than we're giving you the basics of, but it generally takes 60 to 90 days with Wells Fargo, depending on investor. Wells Fargo is one of the easier ones to work with, but they are very strict on paperwork. So, your contract, your listing agreement, everything that you provide to them has to be completely filled out. Your agent who's dealing with it has to have an understanding of how to do Wells Fargo short sales. And if they qualify you for the short sale, the offer meets net, they'll approve the short sale and let you move to proceed to settlement. So basically it's kind of a three-step process. Qualify you for the short sale, get an understanding of value, and see if they get an offer that meets the value that they're requesting. And if you pass all three of these phases, they'll approve the deal and they'll let you go to settlement, and you'll be able to avoid foreclosure. In most cases, you'll be able to get a deficiency release, and in most cases with Wells Fargo, you'll also be able to get relocation money. So again, as I've said before, as with every bank, the best thing you can do if you're looking to do a short sale with Wells Fargo is start the process as early as possible, because Wells Fargo will work with you prior to you even having an offer on the property.